Greetings, this is Clark Neighbors with BIS Commodities with your market recap for the week ending October 16, 2020. Another crazy week in the market, which ties in with the storyline of 2020 as we progress towards the end of the year. For the week, corn up 7 cents, beans down 14, wheat 30 cents higher, leader of the pack. Cattle market down $4 and hogs up about $2.60. Crude oil market was basically unchanged. Funds continued to add to their length in corn, 170,000 contracts long. Actually a slight decrease in the length of beans at 226,000. This comes off the Commitment of Traders report released Friday, which is of last Tuesday. So we'll see how that progresses. It feels like there's more length that's been put in this market, though, since Tuesday, especially in the corn. Again, storyline, $2 2 months as far as the beans. As we wind down, or assuming winding down, the export numbers we're seeing on the soybeans on almost a daily or week-to-week basis on soybeans, as we're approaching the vast majority of the beans that need to be booked according to what the USDA numbers are, we might see the spotlight now shift a little more aggressively to corn. We're also seeing some Chinese demand or interest in cotton, sorghum, possibly some wheat. So this demand story is real, and it continues to be very strong, way more than anybody thought, which is the lead contributor to this market over the last 60 days. So yes, we have seen some supply hiccups and some, especially here in Iowa with the derecho and the dry weather. But all in all, we're still looking at the second biggest corn crop ever, assuming these numbers still hold in. I think you could shave those back. But between the demand story, the stocks report at the end of September, we've seen some major change in this market, and it's kind of a trifecta that has created this very counter-seasonal harvest rally, along with fairly strong basis in most cases, and spreads that just continue to collapse. That storyline's been going on for a while on the soybeans, but in the last week, very, very evident on the corn. China has supposedly booked about 10 million metric ton of corn, according to most experts. The question going forward is how many more? Are they going to use TRQs? Are we going to see some additional reserve purchases? Some analysts are looking for up to 20 million metric ton. I'll put that in perspective. 10 million metric ton is approximately 400 million bushels. 20 would be, pushing 800 million bushels. So somewhere in that window when it's all done in most people's eyes. The USDA right now has a 2.325 export number plugged in for corn for the year. That number could slightly get bigger. So the demand story on the exports has been the pleasant surprise, offsetting in corn at least what we've shaved back this ethanol demand, and I think that's going to be interesting to watch how the year plays out, also based on higher corn prices and also unleaded demand, with the economy still fragile in a lot of cases, how that plays out. So continue to watch that. The other thing that's really going to be intriguing is we have this huge bean export program in place. Between now and late January, early February, we're going to make that transition to South America as the supplier of soy products of the world. At that point, or slightly before that, this corn program is going to become more in focus, and that could entail pretty good corn, at least logistically moving the corn all the way through late next spring or early summer. So we are very competitive in the world corn market right now. In fact, the numbers from a competitive standpoint look good all the way through January right now. So we'll continue to watch this corn demand scenario with, especially with China, but in the world marketplace, whether it's Mexico or whoever. So there's definitely a driving storyline there that has caused corn spreads to really collapse in the last 2 weeks, and more specifically this week. Some analysts are looking for the Dece March to actually go inverted. We'll see, but we're on the brink of that in a lot of cases. And you've seen the return to storage on corn from December to July before the rally started in August, and obviously many things have changed since then. At that time, say 3.5 cents a bushel return per month on corn storage, to now you're maybe 0.5 cent a bushel. So the market that was saying sell your beans and hold your corn, now is the beans are sold. How much longer do you want to hold your corn is the storyline, or what the market's trying to say. So available supply is going to be really key, really key, because if you look at the supply and demand, it doesn't really match up with carryouts and where the market's trading. Maybe those numbers change, but right now available supply is the key thing with this huge export program going in place on beans, and also some degree in corn. Taking that a step further, the focus in the country or in the ag community right now is to move beans to quench the thirst of this export demand on soybeans, as that's going to be really important over the next 60, 90, 120 days. Can we execute all that? And it's going to be a challenge in many cases between barges, barge freight, water levels. Do the vessels show up? Is there enough trucks to get things moved to market? Is rail fluid enough to make things all happen? And in that regard, to focus on moving beans, the farmer puts away a majority of his corn because space isn't an issue. You might have to see some corn basis be fairly aggressive post-harvest, just to keep that input of corn into the ethanol plant, local ethanol plant, local processor, local feed mill, etc. So a lot of moving parts that we're not used to seeing, especially this time of year. So moving forward, continue to watch announcements, which seems almost daily, of beans and possibly corn, with corn looking like it may turn into the spotlight going forward. If those continue, this market looks to be fairly well supported. South American weather is going to be key going forward as we shift into that mindset of the Southern Hemisphere weather over North American weather. And then lastly, just the cash markets, the basis, the spreads. What are they all telling us in the marketplace? And it's very unique year, very unprecedented year. But from a producer standpoint, now going forward, it looks like decisions can be made in regards to, hey, I can sell at this level, at a profitable level, whether it's for the 2021 crop, 21-22 crop, looking out, etc. So there looks to be more opportunities today than we saw 2 months ago, or especially 6 months ago. If you'd like to talk to us about any of these markets, feel free to call us at BIS Commodities. Phone number is 800-373-2525. Catch us on the web at biscommodities.com. With that, everyone, have a great weekend.